Hey guys, in some of the prior videos, we have identified a specific pattern that we have been able to take advantage of. And in this video, we're going to show you specific live trade in detail on how you could have taken advantage of these patterns that we have identified based on Trump tweets. So it's very simple. Anyone could have done this, but I'm going to try to bring some light on how you could have actually traded those tweets to your advantage. And after we show you this live trade in detail, we're going to cover a few very important tips that help you become a better trader. Number one, we're going to show you specifically what we have done and why we did it when the trade actually was going against us. And number two, we will reveal to you specifically some crucial, important things that I believe anyone that day trades or swing trades should really focus on. Just a quick review for those of you that might have missed the prior videos that went into detail identifying this simple pattern, right? Anytime the tweet would come out about the deal with China, the market would temporarily pop. And then almost immediately or within the short amount of time, it would drop. And this pattern has been so repetitive over the last 2 weeks that we have used it multiple times to place multiple successful trades. This is actually specifically how the chart, how the market was reacting. See, sometimes traders get so overwhelmed. Oh, is it a deal? No deal. And they pay too much attention to the facts, to the details that really don't matter. It's not the facts or the details that matter. When you're a day trader or a swing trader, the most important thing that you can do is avoid all these noise and really focus not on the news or the events themselves, but rather how the market actually reacts to what's taking place. So we've identified this simple pattern of deal, no deal. So anytime the tweet would come out, the market would pop. Here's the circumstance of a fake news deal, and then the market would drop. And this trade that we're about to reveal to you was based on these observations. Hey guys, in this video, I'm going to show you how to trade the China trade deal utilizing the simple put option strategy. So the rumor is, yes, China wants to make the deal. It is 11:08 a.m. on Wednesday, May the 8th. So the market's actually moving higher like crazy. Look at this crazy pop. So often the initial reaction is not going to be sustainable. So we actually want to do on this pop, we want to buy puts. Ideally, we're going to try to wait just a few more minutes, see if the market come close to this 2,900 level. It doesn't look like it's going to do that. So what we actually will do is on this pop, the two usual suspects we want to short as far as China concerned is, Boeing. It's popped. So this a good entry here. And BA. Okay, guys, so we actually going to buy these 345 Boeing puts. We're going to buy actually about 30 of them at 0.92. Let's go. Done. Okay, done. So we bought 30 Boeing puts. It trades right now at 358. We bought them at an average cost of 91 cents. As you can see, we're currently losing 90 bucks. Here's how it looks on the chart. So we actually waited for the pop on the news, and we've actually bought, considering the longer time frame chart and analysis there.
Special representative for Iran says any Iranian
we bought
attack
the puts basically when the stock hit the highs for the day. Okay, guys, quick follow-up on the Boeing trade. Yesterday, we basically, on the fake China news right here, we shorted Boeing. So initially, it was dropping pre-market. We waited for a bounce. We got in right here. After we got into the trade, had quick profits. After that, the stock bounced to 361. So we were negative when the trade was here. Today, it gaps down, hitting this level of 353. This is how this trade looks now. Basically, we're making 1,140 bucks. No big deal. We're going to try to hand in there. The issue is, this is probably not a perfect trade because we own these 345s. Right now, the stock is at 353. Now the trade is making 1,365 bucks. Quick follow-up on the Boeing trade, guys. We were pulling the trigger on it yesterday at 91 cents a piece, 30 contracts. It's currently making 6,200 bucks. Here's how it looks on the chart. So we're basically getting in, not here, because this was the high of the day yesterday. After we got into the trade, it shortly went higher. So we're getting about 358. Right now, just hit 348. So that's a $10 drop, generating $6,000 in trading weekly options. Now, temporarily notice the trade did go negative we're losing over $1,000 on the trade because we're getting a 358, and temporarily yesterday it went to a high of 361.52. So, but patience pays off. Now, you don't always want to be patient. There's only certain market environments where you do want to be patient, and the way we calculate it is by using our 13 market moves formula. If you'd like to learn more about how you can do the same stuff, simply click the links below this video, get some information, take the course. It's a 6-hour course. It'll teach you everything about 13 market moves formula. Okay, guys, we're going to go ahead and get out of the Boeing position. We're just going to lock in gains right here. So looks like it's showing some signs of exhaustion there, so we're going to try to go ahead and take it out at 2.7. Buying them at 90 cents yesterday. Okay, done. Sold. Total profit 6 grand. Out of the position. Hey guys, as promised, at the end I was going to reveal a few very important tips to help you become a better day trader or swing trader. So tip number 1, notice throughout the trade temporarily goes against us. What do? We do absolutely nothing. Why? Because we studied the charts. We studied the chart patterns. We studied the charts. More importantly, the charts divergences. So in our calculations, there was very low probability that Boeing was actually going to break above 262, 263 level. It was a high probability it was going to reverse and resume going lower. So shorten the tops. You got to identify these great entries. But you got to also understand that nailing the top each and every time perfectly, down to a penny, down to $1, is not going to be able to be possible. So at times we do it. We nail it right on the dime. But there, in more instances than not, just expect when you're nailing the top, you're going to be close. And you just want to make sure that you don't jump out of a good trade prematurely. If you're looking to understand how to calculate these levels, how to do all that stuff, guys, click the links below, learn more so you can position yourself this year to be much more successful. The second most important thing, just something from my personal experience, guys. When I was a newbie years ago, I used to pay attention to what a lot of traders are paying attention to, like the PE ratio. You know, the details about the earnings reports, the details about what are they talking about in the news. It's a bunch of bullshit that does not help you become a better trader. P ratios, valuations, all of that crap really doesn't matter. The only thing that really matters is the reaction of the market, because stocks fall on good earnings reports. So don't be using good valuations to buy stocks for short time frames. As a trader, as a day trader, swing trader, the PE has absolutely no meaning on what the stock is going to do today. The details from the report, okay, are not important what the stock is going to do today or tomorrow. It's only what the institutional investors decide to do with the information in the report. So a report could be good, the stock could still drop like crazy. Ultimately, over the years, the stock could still go higher, but we're talking on this channel about trading. So let's talk about what really matters. Earnings reports don't matter. The reaction of the institutional investors to the earnings report is what really matters. So again, focus on the market reactions to the events and news rather than the details about those events and news, and spend more time looking at the charts where you can, in a systematic way, identify what institutional investors are really doing. And that's what's going to help you become a better trader. Now, in day trading or swing trading, the most important things to identify, that's what I have discovered. Now, for some other people, the traders out there, everybody's got their different style. They may be looking at different things. But from my experience, placing thousands, hundreds of thousands of trades over the last 14 years, I can tell you that this is what works. Understanding the divergences on the charts, understanding the patterns on the charts is crucial. I don't even know how can somebody calculate a trade without really looking at the levels when you want to come in, what your entry is, what your level of exit is going to be. You have to know these things in advance before you place the next trade. Number 2, the correlations between various parts of the market. That is crucial. I hear a lot of times people talk about scanners. How do you find your trades? I can't believe you never use any scanners. Guys, scanners just temporarily identify what stock pops in the morning, what drops, and so on. You have to really understand the context. if you're trying to become more proficient, trade in earnings, trade in some of the stocks that are on the move, it's not what the stock is doing that day, because initially it may pop, and what is it going to do later? Well, it doesn't guarantee that it's going to drop. It doesn't guarantee that it's going to continue high. You need to know more information, so you really need to study the context on the charts. It's those repetitive, consistent patterns, behaviors in certain stocks that will determine how you should trade it next. All the scanner is going to do, yeah, it's going to show you some stocks that are moving today. You can set certain criteria, identify those, but without understanding the context, that's not going to help you trade these stocks. And so if it's a new stock that you're not familiar with, well, how the hell are you supposed to make any sense of what's going to be next? Because just because something gaps up or gaps down does not give you the criteria for determining whether you should buy the dip or whether you should short the dip. Context is key, and the only way you can understand and make sense out of the context is, again, by understanding the charts, chart patterns, chart divergences. Okay, and number three, most crucial aspect for day trading or swing trading is actually identifying the predominant behavioral patterns in certain time frames. So within certain time frame, as day trader or swing trader, we often want to focus on a shorter time frame. And if we can identify specific predominant behavior, you are really going to increase your consistency of taking consecutive favorable trades in a row that will make you money. So it's the question how to identify those behavioral patterns within a certain time frame. And in order to do that, you have to get familiar with certain stocks. You have to get familiar with certain sectors. So if you're looking to learn more about all the specifics on how to utilize these three things, we have a specific course, live seminar we put together. It's over 6 hours, 7 hours of detailed information on specifically how to trade the earnings season, how to trade the correlations, how to observe some of those correlations between various parts of the market, various sectors. If you're looking to learn more about that, click the link below this video. Take advantage of the information that we have put together to help you guys. With that, make it happen and have an awesome trading week. I will be posting some more live trades soon. Catch you guys in the next video.